All right, what is going on, ladies and gentlemen? Welcome to another Sunday Swings. If you guys can hear me all good, type one in the chat. If you guys don't, type two. I want to make sure you guys can hear me good. Type a one in the chat if you guys can hear me. All right, we got a little bit of a situation going on. All right, what is going on, ladies and gentlemen? Welcome. That's what I knew exactly what was going to happen. Exactly what's going to happen. So we'll just turn this one off. Turn this one off. Pop up the YouTube channel there. Go to the stream. I'm blind right now. Oh, you don't have Wi-Fi? Yeah, you connect to my Wi-Fi. All right, hold on, guys. No? Let's go to the YouTube. All right, boys. If you guys can hear me, type one. If you guys don't, type two. We're gonna have a legendary stream today. I want to make sure we got everything going good. Team is growing, everybody's growing, and today we bought a motherfucking Bugatti. So the Bugatti that we got today was obviously something that I've been anticipating for quite some time, and truthfully, not a lot of you guys expected it for it to be pink. Actually, let me get you the password now. So yeah, I know a lot of you guys did not expect for me to actually come out with the Bugatti right now, and obviously, it's a random thing to pull up with a pink Bugatti. It's kind of unexpected because it's something random. It's not nothing that
and get rewarded as you learn with Coinbase Learn.
All right, perfect. Just want to make sure this is good. We do this. All right, we're just having some technical difficulties. All right, sick. If you guys could hear it, then type one. If you guys don't, type two. I'm looking at the chat now. All right, we got traders from Morocco. We got traders from, where are you guys from? I know there's people from all around the world. It's always good to know where you guys are from. Sick. Okay, we got people from Venezuela. We got people from Colombia. Yeah, everybody can hear me. If you can't hear me, there's probably something wrong with your chat now. Where's it? Hold on. Oh, I know where it is. It's right here. This is the other stream that we got. All right, sick. All right, cool. All right, so we're going to begin in about a minute. Just going to let the rest of the people join the stream that they want to join. Yeah. So we have Jay and Juice here, and then we have Nestor. They're actually students. They came out to Miami for some podcasts and stuff. And then I was like, yo, you guys want to be part of Sunday Swings? And they said, yeah, fuck it. So we just did the previous one with the students now. So now we're doing basically part two for you guys here free, which is almost better because you guys save a lot of the time that I take to run through the whole entire market. So you guys are just going to get straight fire right off the bat, pretty much. So let me share my screen so all of you guys could be with me. Let me actually exit out of this entire screen. And then we have this one right here. All right, cool. This one right here. And then this one share right here. All right, sick. If you guys could see my screen, type one. If you guys don't, type two. And then what do you guys think of the Bugatti color? Do you guys like it or do you guys not like it? Be honest, you guys could be honest. I'm not gonna take it to heart, At the end of the day, whoever doesn't like the Bugatti, it is what it is. Gotta just set and forget. All right, so if you guys can hear me, type one. If you can see my screen, type one as well. All right, sick. Everybody can see my screen. Fire. Yeah, this is Jay and Juice. We have Jay and Juice literally came all the way from fucking Canada, which is sick. All right, cool. So let's get started. So obviously this is our second free Sunday swings that we've ever done. I usually do them free maybe once a month, maybe once every 2 months. And usually every single Sunday swings that I do, I am literally predicting markets for weeks on end. And I can guarantee you markets that I predicted about a month and a half ago are still in the direction that I predicted from those moments then. So my goal this Sunday swings to you guys is to give you guys the same pairs that I'm going to be trading for the 100 to the mill, show you guys insights of my strategy, and then pretty much provide as much value as I possibly can. So that's exactly what we are going to pretty much be seeing today, which is the recap of the 100 to the mill. Basically, exactly how I got to the point where I am now, because I assume a lot of you guys are in your own 100 to the mill version of your challenge. I know some people started with $1,000, they're up at 50,000. I know some people that started with 5K and they're up 100K. I started with $100, so I'm only up 8,000, which kind of sucks. And if I were to be up, obviously with a bigger deposit, I'd be up a lot more. Then next, I'm going to show you guys exactly how my strategy works and the why, because, you know, predicting these markets every single week is obviously kind of out of a lot of people's understanding on how I can do it. So I want to make sure I can get to the basis of that. I'm going to show you guys some examples of my strategy in real time. So I'm going to probably somewhat enter a position right now. Obviously, it's not going to be ideal. I'm going to show you guys the actual Sunday swings, this is what I do every single Sunday with my students, where I prep them for the week ahead and I share with them literally every single trade that I'm looking to trade, and how you can join Swing Trading Lab and how you can be part of the Seven Figure community so you guys get the same trades as me as every single week. Or you guys can possibly be like a Jay and Juice, where you guys are, you know, here at my house being part of this stuff. Like this guy, I did not know who this guy was like 2 months ago, and he's here at my house. So life is crazy. So yeah, that's pretty much it. And with that being said, let's get started. So I want to start off with the recap of the 100 to the mill, because I know a lot of you guys are either getting started into the journey now, you guys are probably seeing it now, or you guys have been in it from the beginning. So we start off week 1 of the 100 to the mill. We turn $100 into 437. We turn then 437 to 3,000. Then we turn 3,000 to 15,000. And then on week 4, we had our first loss on the challenge, where then it took us down to $8,000. Now, my goal is on week 5, which is basically which was last week, was to take it from 8 to 17,000, 18,000 more or less. But obviously, I did not take any trades last week. And I'm going to be explaining that as well on this stream. And this is kind of what I have projected for the following weeks. So my goal is to pretty much double up every single week that the market has ahead of itself, because we have to obviously have some type of goal so we can understand what we're going to risk. And I'm going to explain as well what I'm going to risk on my challenge. At what point I'm going to minimize the risk. At what point I'm going to double down on my risk, everything that goes into turning the $100 to the mill. So first of all, I want to explain how my strategy works. And it works very simple, because if I just go straight into the charts, it probably won't make sense. So I want to give you guys just a simple foundation of it. The first thing is we got to identify the direction of the market. Is the market bullish or is the market bearish? I can't be interested in buying a market or selling the market if we're not bullish or bearish understanding the market. The first thing is I got to understand the direction. Where are we going in the market? Next is, where are we going to enter that direction with the market? Are we actually bullish or are we actually bearish? So where are we going to enter on that buys or on those sells? And then lastly is going to be the actual entry point. So the entry point is the entry signal, everything that people look in order to enter their position. I'm going to be sharing that with you guys as well on this stream, which is going to be very valuable to you guys if you guys are struggling with properly entering a market. So with that being said, let's see some real time examples and the markets that I'm going to be interested in trading for this week ahead. So if you guys are ready, put a 1 in the chat. If you are not ready, put a 2 in the chat. We got to get some energy up in here, because honestly, trading is fucking boring, right? Isn't trading boring? That shit just is basic, you know.
Basically, yeah, but I love it.
I mean, yeah, because you grow a passion for it, but repeating the same thing like over and over and over again, you know, it gets super boring.
Yeah, get used to it.
Yeah, it's literally like a routine. So if you guys are ready for the stream and the Sunday swings, put a 1 in the chat. If not, just leave. No, I'm kidding. Don't leave. The whole point is you guys learn, you guys stay here and understand exactly what pairs I'm going to be trading for the week ahead. All right, we got a bunch of 1s in the chat. Everybody is ready for Sunday swings. So to give you guys a bit of an understanding, I actually trade, like, I don't trade just 1 pair or 2 pairs, right? But I don't trade every single one of these pairs. So for this week, I have 1, 2, 3, 4, 5, 6, 7, 8, 9 pairs that I'm actually interested in trading for the week ahead, meaning that I'm not going to be looking to enter every single one of these markets, but that means that I'm going to find my strategy in these markets and then apply it. So I have the same systematic approach to any market, to any pair, any currency, anything you want to call it. It's the same systematic approach. And if my system does not check off in any of one of these currency pairs, commodities, futures, stocks, options, whatever, I will simply not enter the position. So this is where I find the most ideal markets that are going to have that high probability of a trade. And I first do a breakdown of every single one of these markets. So all these markets that you guys see right here are the markets that I actually analyze every single Sunday. I look at them to find the best ones that have the most confidence in order to take a trade. And then after analyzing all of these, which is where I do a full top-down analysis, then I break it down to then, let's say, top 3, top 4, top 5, top 6, top 7, so on and so forth. But for this week, we actually have 6 different markets that we're actually interested in. No, we actually cut it off on Euro USD, I believe. Yeah, so I actually cut it off on USD. So we had 1, 2, 3, 4, 5, 6, 7, 8 markets that I'm interested for this week. So there's 8 different markets that can potentially have my strategy check off at that very moment sometime during the week. So my systematic approach can happen sometime during this week on any one of these pairs. And I'm going to teach you exactly how to do that. So I'm saving you guys like another hour trying to find that approach on all these other 10 different markets. So I already did all that with my students on Sunday Swing. So you guys are getting the very easy and straight to the point version, which is good for you guys because you guys are going to be able to learn from that. But it's a benefit for my students that are on Sunday Swings because they get this literally every single week, what we're about to do today. But before I actually get started into the currency pairs, I want to start off with Bitcoin. So I've been testing my strategy, my technical analysis reading on cryptocurrencies, on commodities, on anything that has a chart, honestly, and it works very, very precisely. So my analysis currently right now on Bitcoin is obviously somewhat bullish, somewhat bearish, right? Obviously, fundamentally, Bitcoin is going to be bullish pretty much forever because it's being used as a digital currency, which has loads of value and, actually has a purpose. But I think that this digital currency or these charts can have some type of a pullback into a different level before actually continuing to head to the upside. So if I just base this off of technicals, I can clearly see that this level of support, this is a level of resistance. Whenever we're under, we are selling. Whenever we're above, we're buying. Whenever we're above, we're buying. And as of right now, whenever we are under, we are supposed to be selling. So this right here is a clear example. Whenever we're under, we're selling. Okay, cool. We have a weekly doji under, daily time frame, very well structured on the downside. Daily time frame is bearish. My predictions on this, just based off of very over-the-top technicals, is that I anticipate for this to have a rejection from here and make it to either this structure point or this structure point somewhere in here before actually heading to the upside. So again, I'm not a crypto trader, but I'm constantly testing my strategy on different markets just to learn. NAS 100, not even interested. XRP, there's no technicals. Solana, no technicals. So let's get started right in with my first pair that I'm interested for the week. If you guys do not write down notes, if you guys do not pay attention, you are literally wasting your time. Like you can literally change your life completely if you pay attention to these technical analyses. They're going to change the way you're going to read the markets forever. It's as simple and as effective as it gets. So with that being said, Euro GBP, first pair of the Sunday swings. Currently, Euro GBP was bearish. We had lower high, lower low, lower high, lower low, and now we have a higher high. So this is what this market looks basically based off of structure. Clearly, we were in a downwards channel, and after we're in this downwards channel, we have broken out, and then we are retesting a area of interest to then head to the upside. Now, our job as traders is to predict how far is this pullback going to go before actually having the push to the upside. Now, is this pullback going to happen up to here, 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 here? We're just trying to figure out when is this going to stop before it actually has this move to the upside, because this is where we want to then capitalize off of this market move. We don't want to capitalize off of this counter trend trade because you're simply just putting money up at risk that doesn't make sense. What do you think has a greater risk to reward? This pullback that that has a high probability of stopping before it actually heads to the upside, or only focusing on the buy that is going to obviously give you the high probability trade and you're going with the direction of the market, obviously trading with the trend. As of right now, what we're trying to do is figure out when is this pullback going to stop before it actually has this push to the upside. Well, what if I told you predicting that stop is actually a lot easier than you can imagine? So we've had this very strong push. And now, if you notice, we are approaching a area of interest, level, support, and resistance. This is a structure level on the weekly time frame. Clearly, whenever we are above it and then we reject it, we have a push up. Clearly, whenever we are under it and we reject it, we head to the downside. Whenever we are above it and we reject it, we head up. Whenever we're above it, we reject, we head up. So statistically proven, every single time we're above this structure point, we head up. Every single time we're under, we head down. Well, right now we are above it. And what a coincidence that it also happens to be around psychological level of 85,000. Daily time frame happens to also be bullish. So this is what the daily structure point looks like. If we were to make this very simple, this is what the daily time frame structure looks like. This structure time frame is bullish. This is not bearish. A lot of beginner traders would then think that this market is bearish because this is a lower low and this is a lower high and this is a lower low, and they're completely wrong. This is bullish. This used to be the lower high, then this used to be the lower low. The market then, once it broke under the structure point, this became the lower low, and then this became the lower high. The moment we body close above the lower high, then this becomes the new higher high, and then the last structure point becomes the higher low. So this is technically the higher low, and this is technically the higher high. This market can do whatever it wants in here, can literally dance around as much as it wants. And it's going to remain bullish as long as we don't body close either above or under this line. The moment we body close under this line, we will then be bearish because we broke the higher low. And the moment we body close above, then this continues bullish. This becomes the new higher high. And then the higher low, well, it's literally the last higher low point right here. This is just all very basic market structure stuff that honestly 90% of the industry does not know how to do correctly. So now that we understand that this market is bullish, and this is what this market structure looks like, that this market is indeed structurally bullish, we also tend to notice that, wow, when you look at it on the daily time frame, this is also very well respected on the daily time frame. You can clearly see how whenever the daily is above it, we reject up. Whenever the daily is above it, we reject up, we reject up. Whenever we're under, we reject down. What a coincidence that we also have a daily EMA at this area of interest along with ground psychological level. This is going to be key because now you're adding a bunch of different things together. You're adding weekly time frame is bullish, right? So if I were to just do very basic confluence, right? First one we have, let's add it here. We have first one, we have weekly bullish. Then we have daily bullish, right? So the first things first, as I mentioned when we started this class, was all right, we have to understand the direction of the market. Clearly, the majority of the direction of the market is to the upside. So it's going to only make sense to actually take trades to the upside. It makes no sense to take a trade to the downside when you have two of the higher time frames that are actually going up. Lit. Now that you understand that this time frame is bullish, next is area of interest. Well, we have a daily area of interest slash weekly area of interest along with a round psych level, which is this point right here. This 85,000 is a round psychological level. All right, cool. So now we have both things that we're looking to enter the trade. But now something that you could add on top of that is going to be the daily EMA. Because once price dips down a little bit more into this area, then this EMA is going to then have its little push here. And then it's going to use it as a resistance. What a coincidence that we are under this level of support and resistance, and we reject this area of interest, and then we also reject the EMA. Doesn't that look like exactly what we are waiting for price to pretty much do right here? Like if let's put it like this. If I were to literally flip this chart right now, if I were to literally come here and invert the chart, it literally looks like what we are looking to do with this market. Break, retest the area of interest, retest the EMA. That is exactly what we are looking for price to do right here. Break, retest, area of interest, and then EMA. It's literally the same thing. So our third confluence would then be daily EMA, which is an added confluence. And this is literally off of just 2 seconds of looking at this chart. Once price pulls up into this area and it starts rejecting, you would then add daily rejection candlestick. Then you would add other stuff that we're going to look with the strategy. And again, this is a very basic foundation of the strategy that I use. And by having this simply alone, once price has a pullback to this point, all you have to do is ask yourself, what makes more sense? To take a buy at this point or take a sell? It's a very simple question you have to ask yourself. Is it going to have more probabilities of going up, or is it going to have more probabilities of it going down? And you build out your confluences for it to buy, you build out confluences for it to sell. I guarantee you one is going to outweigh the other, and then you just make a decision based off of that. It's very easy. So what I'm going to be waiting for is for price to have a pullback into this area, have my rejection, in order for me to take the trade into the upside. This is Euro GBP. Next, GBP. Well, before I keep going, that makes sense. Type 1 in the chat. Want to make sure that we are all on the same page. So the chat is actually delayed like 20 seconds from when I say it. Just, the way how streams work, it is a little delayed. So if that all made sense, type 1, and then I'll continue on to the next market. Yeah, my EMA is currently the 50 EMA. All right, sick. Perfect. All ones in the chat. Dope. All right, we got 9,000 traders in here. What happens if I blow the account on the 100th mil? I'll just do it again. Literally. I'm not going to stop. Just looking at the chat. All ones. Literally not one single two. Perfect. Awesome. Sick. How do you get around psychological levels? I don't get around it. I just add them as a confluence if they're in my area of interest. All right, cool. Next, GBP CHF. So fun fact about GBP CHF, I actually made the majority of my money on GBP CHF over here. Like this is where I started actually becoming profitable around 2021. This is where I really started making money, because I caught the buy and I caught this whole entire trend. It was just a beautiful breakout. It was just beautiful. It's where I actually got my first, I passed my first challenge. I got my first payout. I still have the little risk. I think I still have the risk to reward tools around this area here. Yeah, all of these positions right here, I literally caught every single one of these pullbacks. So I actually have not traded this pair since about 2021. So I've been trying to enter a position on this pair again, but it hasn't given me the opportunity. But I think now it might have given me the opportunity. So again, let's do a very simple test on this market. Is this market bullish or is this market bearish? Respectfully, I can guarantee you 70% of you guys are going to answer this incorrectly. Now, again, there's nothing wrong with that. You just got to know what you're doing wrong and then you fix it. So is this market bullish or bearish? Drop it down in the chat below. I might take off this little just here. Okay. Yeah, I mean it's being live streamed. I don't know if I might just post a recording, not entirely sure. All right, so if you guys look at the chat, you can clearly see the majority of you guys are saying bearish. The other portion of you guys are saying bullish. Now, obviously, somewhat of my analysis has somewhat influenced your decision. It might be good, might be for the bad. So this market trend structure is actually currently bearish. So this market was creating higher low, higher high, higher low, higher high, higher low, higher high. And then we have done this right here. We look at this in a very simple structure way. Clearly, this market was creating higher highs and higher lows, was in a bullish upwards trending market, and now we have broken out of it. If you notice, we created two different types of formations here. We created a head and shoulders, and then we created also a double top pattern that we have now had the neckline from this point right here, where we have now retested or are retesting that neckline. So we have a shift of structure. The structure was going from bullish to bearish, and then we also have a double top formation. Now, this double top formation, you can only enter it once you have the retest of the neckline of that double top. All right, cool. Well, when you mark off that neckline of the double top, when you look left, wow, it also happens to be a level of support, also happens to be level of resistance, a level of resistance, a level of resistance. Wow, shit. This looks like a good area where if price is above, it's going to head up. And if price is under, it's going to head down. Well, clearly we are under it and we're retesting it. It's going to probably push down because not only are we retesting the neckline, we're also retesting this strong level of support and resistance. So whenever we're above, we're going up. Whenever we're under, we're going down. And wow, what a coincidence. We also have the weekly EMA. So whenever we're above it, it's holding price up. Whenever we're under it, it's holding price down. Wow, okay, that's another coincidence. Wow, what another coincidence that we have round psychological level 1.12500. So now you have three things on just one simple time frame that is giving you so many reasons to look to enter a sell on this trade rather than a buy. This is literally as textbook, as simple, as effective as it can be. When I go down to the daily time frame, wow, what do I see here? I can see the EMA dipping to now the downside. Whenever we were going bullish, it was holding it up. Now when we're going bearish, it's holding it down. What a coincidence, the EMA is also dipping right into that area of interest, right into the round psychological level. And it's right where the weekly EMA is. Wow. Now you have 5 different reasons on why to be looking to enter this sell versus a buy. When you go down to the 4-hour, what do you see? Wow, you see the 4-hour is clearly creating a bullish channel. Looks something like this, right? I don't know, ask yourself, right? Does this look very similar? You have this upwards channel right here. Again, I hate using trend lines, but I just use this to so you guys get a visual understanding of what this looks like. Wow, this is working on an upwards channel. What did we do? We broke out of that channel and then we retested that area to then head to the downside. Well, if I simply come here, we have a different version of this channel, but now simply heading to this upside. Try to copy and paste this. We're clearly in a channel to the upside in this area. What can we expect here in order to be entering this trade? We simply wait for a break out of it, retest, head to the downside, just how it did here. Broke out of it, retested the EMA, head to the downside. We're going up, the EMA support. When we break out, retest, and the EMA heads to the downside. If this makes sense, type 1. If it doesn't, type 2. Honestly, I cannot make this any easier. This is probably one of the easiest sells that I can possibly lay up to you guys this upcoming week. Like this is literally a market that can have a risk to reward, depending how crazy your entry is. We can have a risk to reward of a minimum 1 to 5, 1 to 5.5 at least. So if you were to risk 2%, you're making 10% on just one position on the market, which is absolutely insane. All right, bunch of ones in the chat. I'm trying to keep up with the chat, but it is a little difficult. What is the round psychological level? So basically, that's the smart money concept, the order blocks, the institutional price, basically areas where banks liquidate big positions. Now, I personally do believe that this is real. I don't think it's a theory. I just don't like how people create strategies just around that. I don't know how the hell they could do that. I just think it makes more sense for a bank to liquidate a position at let's say at 1.110 rather than at 1.10683, for example. It's just not ideal for hundreds of millions of dollars to be liquidated at a random price point for accounting purposes, for everything. At that level, it's just better to close it out at a higher solid number or at a lower solid number. So let's say that all the market is being pushed up here because of buyers, and all these buyers want to liquidate their position at a round level at 1.2500. As soon as they all liquidate and sell their positions and they exit them, what's going to happen? The market then has a move from that area because people are getting out of the market. Simply how it works, it's a supply and demand thing. If all the demand is pushing it up, but then all the demand gets out at this level of round psychological, then the price is then going to simply reverse. It's just simply how it works. It's just literally how the market works. So yeah, this is my analysis for GBP CHF. Very simple, very straightforward, literally straight to the point. Next, we enter a interesting position, which is going to be Euro AUD. Euro AUD is currently a little funky, right? I don't really like trading markets like this. I only like trading markets that look a lot cleaner. This market looks very, very funky in my opinion, because weekly time frame is bullish. Looks like it's going to have a pullback, but then daily time frame looks bearish, but it really is bullish. But then it looks like it's going to go bearish because then it has a head and shoulders pattern and, well, a potential head and shoulders pattern because it hasn't completely created it, even though it did break through the neckline. For me, a valid head and shoulders pattern is once the market structure has completely actually changed. So again, this market is currently bullish. Look at the structure. By the way, structure is based off of bodies, not wicks. So you look at this structure right here. Yeah, you see a beautiful head and shoulders, but what do you know? This is the higher high, right? Very easy, very simple. And then the higher low is at this point right here. This market is still bullish. This from here can literally just have a push like this and then head to the upside. This can just be a complete false head and shoulders pattern, just how it was here. This is a false inverted head and shoulders, left head, right shoulder. It shifted the structure and everything, but it was just an invalid pattern. This can be an invalid pattern for all we know. So we don't want to pretty much put all of our money in one of these baskets that is not as guaranteed. It's not a lock. It's not a good idea. It's not a good trade idea. As for example, something like this or something like this, which are literally going with the trend. Here on your AUD, it's a bit of a degen trade. You're not really following your trading plan or my trading plan because you're taking trades against the trend. You have to trade again once you have the direction of the market. And if you're trading against the direction of the market, you're simply just putting yourself at extra exposure for no reason. But I do have a little analysis on this trade, which is going to be a little quick pullback to this level after we actually body close under this point. So the moment we body close under this higher low point, so let's say as soon as we get a body like this, is then where I'm going to then wait for the market to have a lower high, retest this area, how it's done here, how it's done here, how it's done here, here, everywhere, and then actually head to the downside. I want to only sell at the point where price is going to actually have the push rather than a little wick, right? I want to have the full body move to then that next point. So Euro AUD, it's a bit of a higher risk trade. You just have to be very selective with how you're going to risk and how you're going to go about it. If that makes sense, type 1. If it doesn't, type 2. It's going good, right? Simple, effective, easy, right? Easy money. Is 35% a month risking 1% with swing trading possible? Not really, dude. Risking 1%, 35, that's like some crazy shit. Like you can get 35% a month risking like 7%, 5%. Yeah, 1% is, dude, you're not being realistic. All right, perfect. Want to make sure we all understand. All right, what questions do you, I see some twos in the chat. What questions do you guys have so far on Euro AUD? Please ask away. Well, the wait for the 4 hour now that, so the EMA is just an added confluence. I don't ever use it as a reason to not enter a trade. I just use it a reason to add it to the reason of why I'm entering the trade, but I wouldn't get scared of it to not enter a trade. What's your perspective on back testing? I think back testing is the biggest waste of time. There's no way that you're going to be able to be profitable by back testing. You go through so much price action in such little time that your perception of the markets is never going to be real. You're going to go through a year worth of price in 60 seconds. The patience you have to actually go through a year's worth of price by winning and losing is a completely different character that is built when you're actually doing it live. Back testing is never going to make you profitable, in my opinion. What if it creates a higher high on GBP CHF? I just won't enter the trade. You guys gotta remember, like just because let's say I put a market, right? And then this market, it comes into this area and it doesn't give me my entry. Dude, I'm not entering. I don't give a shit. Like I have to wait for my entry to play out and I have to be ready to enter this market. I can't just enter this trade just because it got here. Oh, it got to this level, sell, boom. No. Like it could get here and I'll wait a day or two for it to give me the entry signal that I need in order to actually enter the trade. I'm looking through the chat, seeing what's up. Show the people how you have no market gaps. I mean, yeah, this is actually a really big thing. So you know how to do it? So explain it, right?
Yeah.
I don't know. I don't know. So again, for those of you guys that are new in here, Jane Juice is one of my students. He was part of the 30-day boot camp. He's out here for a podcast.
All right, so
But they know all these technical stuff that I don't know.
what you gotta do is you gotta go to the indicators right here, and you have to write no gaps candles. Is it? Yeah, it's that one. I'm just gonna fuck it up.
Just fucking click it. We'll fix
All
it.
right. So you add the no gaps candles on it, and then what's gonna happen is you're gonna have to click on the previous wicks, and you're gonna have to remove whatever visibility for wicks you had on the previous ones. Once you have the no gaps candles, you're gonna have something like this, and it's gonna be red and green. But with Alex, we would want to have it be blue.
Blue and red, yeah.
So you're gonna change this one to blue.
And the wicks and the bodies. Yeah.
This one is gonna be red. The wicks and the bodies, we prefer them to be black. And that's pretty much it. That's all you have to do.
Okay, sick. Yeah, I don't know. They do that shit for me. Yeah, they find out crazy. So I take this one off.
You take both off, I fix them.
Okay, there. Sick. All right, so I'm gonna just take this one. All right, cool. So yeah, that's how you do the no gaps. All right, cool.
But they have to be on OAN though.
Oh yeah, that's the other thing. Yeah, you got to be on OAN the server.
It's gonna be different.
Yeah, and personally, I think it's the best server compared to the other ones. OAN never had gaps in the past. All right, sick. Following through. Next pair. Next pair is going to be USD CAD. So USD CAD is a very interesting one because currently the weekly time frame is bullish, but it pretty much only has, I don't know, a couple pips in it before it can then turn bearish. Has about 45 pips before it actually turns fully bearish, but there could be some type of room to actually capitalize on that move. So that move could look something like this. Currently, the daily time frame is bearish. This is what the daily time frame structure looks like. This right here is the lower high, lower low, lower high, lower low. This is what it looks like this. So clearly, this time frame was bullish at one point, right? Higher high, higher high, higher low down here. Then we created a new higher high. That's the higher low. Shifted, lower low, lower high, lower low, lower high, lower low. Now we're obviously at a lower low. We cannot sell at a lower low. You have to only sell at a lower high. So now what we have to do is wait for this lower high in order for us to then enter this position. You want to enter a market when you are here. You don't want to enter a market here. You're pretty much catching a falling knife. You want to enter the market once it's giving you that pullback so you can have a greater risk to reward. So what we're anticipating for USD CAD is for it to have a pullback up into this level of support and resistance, and for it to then come and retest this EMA as well. It's going to create a lower high to then head to the downside. It's literally to do the same exact thing we did here. Once this market had this break right here, what did this market do? It had a lower low. What we anticipated is for the price to then actually have a lower high into the area. So then we can be interested in then taking the position to the downside. So we had the lower low, lower high, and then lower low. So right now we are at that lower low. We're just basically wanting for history to repeat itself. And let me tell you right now, the market repeats itself very often. We'll be entering our trade right around here, stop loss right around here, and then our take profit right around here. This is more of a smaller type of trade. You'll get a 1 to 2.5 risk to reward. If that makes sense, type 1. If it doesn't, type 2. Do you want the bodies for the area of interest only? Yes, I do not use the wicks for the area of interest. I only use the bodies. What EMA do I use? I use the 50 EMA offset 0. So I have the EMA, length is 50, source is close, and the offset is 0. Do you think the bodies? Yeah, the bodies are way stronger than the wicks, because at the end of the day, the wicks is just the trail that the candlestick has actually left, just the history. It's like a little quick wind. But the bodies is the real movement happening currently right now in real time. It's not a wick. If you were to look at structure is based off of bodies, not off of wicks, because wicks are not real. It's just a quick that happens. Bodies are what stays, which is the real move. Awesome. All right, cool. Next, moving on onto GBP USD. So it's funny, right? Because GBP USD, we got once again this channel because of Euro USD. So Euro USD, we were in this bearish channel, and then we had a strong breakout. And then after this breakout, we had a retest, and then we headed to the upside. GBP USD, we have the same bearish channel, and then we then had our breakout, and then we had our retest, and now we're heading to the upside. So it sucks because we actually missed GBP USD, and then we actually missed Euro USD. So we predicted both of these markets perfectly, but we missed both of them. It is what it is. It's part of the progress. You just set and forget. Now for GBP USD, it's looking very clear. Currently, right now, this is how we're looking on the weekly time frame. Weekly time frame, we have a very clean higher low, and then a potential higher high. Potential because it hasn't happened just yet, so you don't know if it's going to be permanent. So this is the higher high, and then this is going to be the higher low. This has not body closed above, so it does not make it the new higher high, and it does not make this the new higher low. That's why it is a potential higher low, because for all we know, this can literally from this point do this and then head to the downside. And now this is the lower low, and this is the lower high. That is a confirmed lower high and lower low. This as of right now, this move right here, this current leg, there's nothing confirmed about it. It can be a potential higher high because of the market movement, how it's moving, and we can make a very high level assumption of it, but it's not the truth about it. So right now we have a very strong bullish engulfing candlestick. What we can anticipate is a wick pullback to then continue taking this trade to the upside. If we go down to the daily, it is literally very, very clear because you can see how we had the bearish structure to the downside, higher high, higher low, higher high. All we're just waiting for is the price to have a higher low to then continue heading to the trade to the upside. If you see, you can see the bearish legs over here, and then you can see how these legs are now going bullish. So we want to make sure that we can wait for that higher low in order so we can enter this trade to the upside. This is going to be key because you don't want to buy at the highest point. It's just like Bitcoin. You don't want to be that guy, right? You don't want to be that guy that buys Bitcoin at fucking 72,000. You're buying at the highest point. That shit makes no sense. You want to wait for a little pullback. It's the same thing with GBP USD. You're just waiting for a little pullback to enter the trade to the upside. It's that simple. So we're going to be waiting for a pair to come back into here. So then we can wait for the retest, and then we can enter this trade to the upside. If this makes sense, type 1. If it doesn't, type 2. And again, this is a very, very over the top Sunday swings. Like, dude, like the ones that I do with the students, I just go a lot more in depth. There's a lot less people. There's more private, more exclusive. So I'm actually able to answer more questions. So I'm not interested in looking at any markets outside of the ones that I currently have right now. It just doesn't make sense for me. Like I only focus on the markets that I personally believe that I can find my strategy in them. Not saying I can't find my strategy outside of other markets, but I don't need more than 8 markets. Like this is more than enough for me to find an opportunity this upcoming week. All right, perfect. Perfect. Sick. I'm just reading through some of the questions. Yeah, we gotta wait for this pullback. All right, cool. So that is GBP USD. Next is going to be NZD USD. Currently, right now, is a bit of an interesting one. NZD USD, we are currently at a higher high point, but then the daily is bearish, but then the weekly is bullish. This one, I went really deep in with the Sunday Swing students, and we actually predict this whole entire move like 2 weeks ago. So this is very deep. To make it very simple, we all have to do is just wait for a pullback from here to this level, wait for our strategy to check out, and then we buy. Or if price decides to then just have a push and has a break, pool, we'll simply just wait for price to then have a pullback of this level before actually heading to the upside. It's very simple. The in-depth explanation that I did with my students on Sunday swings is just too much to go over right now. That alone will take us 20 minutes. I'm not trying to bore you guys here forever. Next, and next, I wouldn't say last. No, Euro USD will have it as last. Next is going to be GBP CAD. So GBP CAD, very clearly, we are bullish on this structure right here. You can clearly see this is what we are looking like. We have a bullish higher high and higher low move. We have a higher low pull or potential higher low pullback to retest the structure level to then head to the upside. Now, this is very interesting. Why? Well, because, and this is where a lot of traders aren't successful because they aren't doing an analysis like this. They see price, higher low, higher high, retest. Oh, buy. It's like, buddy, it's not how this works, dude. You're not gonna buy a Bugatti by analyzing the markets like that. Respectfully, sorry, it's just not gonna happen. So what I realize is when I look left, I'm like, well, we haven't been this high how we are right now since 2021. So it's been 4 years since the last time that we broke up here. All right, cool. It's not that bad. 4 years, you know, you can maybe get away with that. But when I keep looking left, I can tell that we just haven't even broken above the high that we went to in 2018. So it's been a little bit more than 4 years of us just even being over this actual high of the market, which is quite interesting because why would you want to buy into a high that hasn't been broken in over 8 years? It just simply does not make sense in my opinion. So this is where I decided to say, you know what? What if we just simply repeat what history has done? Well, what has history done? Well, if we notice here, we broke above this high, and after breaking above this high, we rejected the round psychological level 1.77500. When was the last time we did that? Okay, well, we actually did that right here. At this point, we went to the high, we rejected 1.77500, and then what did we do? We had a major sell-off and we headed to the downside. Now, this one's a bit different because we had some type of a reaction from this level. This thing broke above and just completely broke under, and it was just gone, screwed. This is looking a bit different, but it's still on the same trajectory to do the same kind of thing. We notice here, did the same thing, pulled it to the area, gone. So we have to be very selective and very cautious on this trade, simply because it can not continue going with the trend if you're only looking at the trend. If you're just looking at the trend and you're not taking all these other things in, like if you're not factoring all these other things in, then you can simply take an unnecessary loss by just looking a little bit more broad point of view of the risk that you're going to take on this market. So this is where I then go down to the daily. I'm like, you know what? This kind of looks like a little ugly head and shoulders pattern. Let's be honest. We've all had an ugly girl. It's not a big deal. You know, you just set and forget. I got another one. Or an ugly guy. You had an ugly guy?
Never in my life, no.
No? Same. So this is where we just simply have to wait for price to have some type of reaction from here. My analysis is that price is going to have a rejection from here, get to this point, and then once price gets to this point, then I will come to a conclusion if we're going to be interested in buying or if we just wait for a break and retest and then we are interested in selling. Next and last but not least for the technical analysis part is going to be Euro USD. Euro USD is kind of very similar to GBP CAD. GBP CAD was at a high, we rejected it. It looks like now we're trying to make our way back. Oh, showed you guys a little insight there of the strategy. Can't be showing all that. Even then, I can literally show you guys all that information, and I promise you that it's gonna literally be impossible for you guys to understand it. Like it's just I can give you guys the handbook on how an engine works. You're not gonna know how to properly build the engine or how to run it unless someone teaches you how to do it. It's just the reality of the situation. So currently right now, Euro USD, we are at the high points that we have been previously, that we very strongly rejected from. And we have very strongly rejected from 3 times, once, twice, technically 4 times, and 4 or 5 times right here. Now we're at this point again, and once again, it is a round psychological 1.10500. Daily time frame, we are very much bullish. This structure, you can very clearly tell it is creating higher highs and higher lows. These higher highs and higher lows is what can determine if we are going to break out of this level of resistance, how we've done here or not. So when I go down to the daily time frame, I look at this right here, and we were creating higher highs and higher lows to break out of this structure point. But this one, I don't think it has it in it. So what I'm going to be waiting for in order to enter this trade to the downside is basically going to be a shift of structure from this point right here. I'm going to be waiting for a quick break, retest, to then head to the downside. Now, it is very strategic how I actually organize all of these markets. I organize them from priority of which ones I believe are going to happen faster than not. So I believe Euro GBP is going to happen before GBP CHF, GBP is just going to happen before Euro AUD, so on and so forth. It's all organized based off of the order of when it can possibly actually play out. This is what I do every single Sunday with my students, but obviously in a lot more in depth. So if you guys have any questions up to this point right now, please ask away. Please make it technical. No, I don't look at gold. I never analyze gold. I never analyze that in the markets. How do you mark your areas of interest? You have to have more than 3 structure points that reject those areas in order to enter the trade. My EMA is the 50 EMA. What time frame do you put for your rectangle? So the time frame is going to be depending on where I'm looking to enter the trade or what I'm doing with that time frame. But every area of interest, every box is very different in their own way. Yeah, I was thinking of doing a Miami meet and greet. I'm not entirely sure just yet. Would I ever switch to futures? Never. I think I'm doing very well in Forex. There's no need for me to switch. Since it's not broken, I am not trying to fix it. um Yeah, Alex, just one question. How do you see that this is the point where my stop loss should be? Can you please answer that question? Yeah, so like the stop loss is going to be key because you have to understand where the area of interest is. You always want to have your stop loss above or under the area of interest. Very simple example. Let's say you have this bullish market right here, and let's say that this is your area of interest. You want to make sure that your stop loss is under that area of interest. So if price for whatever reason decides to test the bottom or lower than the area of interest, you're somewhat covered just for those potential wick outs. That's why I very rarely ever get wicked out. And when I do, I hate it because it's such a dumb thing. But I would always try and have it above or under the area of interest to give your trade breathing room for a potential wick out or for any of these crazy stuff that happens with the markets now on the regular. Yeah, so these are the only markets that I look at. What time frame do I look for entries? So I have the weekly, daily, and the 4-hour for trend and area of interest is where I look to actually enter the position. So these are the time frames that I use to mark off my zones, blah, 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 blah. Then from the 4-hour down, so 4-hour, 2-hour, 1-hour, 30-minute is where I actually look to enter the position. So I use these lower time frames for entries, and that's why I have such precise entry signals. My entry signals is very different. It varies from, engulfings, rejection candlesticks. These are all very simple candlesticks, but like a lot of people ask about the entry signal. It's like, dude, you guys have to understand, like, there's so much that goes into the trade other than the entry signal. The entry signal is literally the last step of me executing a position. So I would not put too much focus on an entry signal if I was you guys. But to simplify, my entry signal is literally a pattern like this. It could be a morning star formation like this. It could be a evening star formation like, I don't know, like, for example, like this one. This is an evening star formation right here. I could also look for an engulfing. So this right here is also a great entry signal. I just need something that confirms that price is rejecting the area that I'm looking to enter by. So I enter the market by specific zones, and I want to make sure that my stop loss and my take profit are placed correctly within those zones. Sick. So yeah, that's pretty much it for the Sunday swings education part. I know you guys probably are wondering how I get results. Well, these are the results that I literally get with the set and forget strategy. I've gotten results of 100,000, 75,000 in like a couple seconds. Like it's been pretty fast sometimes, but truthfully, it's not only me. Like I've literally had tens of thousands of students. Like this guy right here turned $100 to 2.5 thousand in 9 days. I had this guy turn $220 to then pass a 10K challenge. I think this guy made a couple $100. Like people are getting funded left and right. Look at this guy, $100, then 8,000. This guy made 4,000. This guy made $29,000. How much have you made, bro? Like tell people a little bit of like your like results that you got in with the strategy.
Last week I made 27,000.
Oh, for real?
Yeah.
Oh shit. But off of what? Like what kind of money?
With Rocket.
Really?
Yeah.
Oh shit.
So
yeah, let me see. You're gonna show the people?
Oh, it signed me out because I got a new one.
Oh shit.
But I sent it on the group.
Oh, we'll go into the. So I don't know if you guys know, but Jay and Juice is part of the 30-day boot camp, and this is like the craziest student. Literally, the guy asking the most questions in the chat. So how much did you know about trading when you started?
Really, just barely anything.
Really?
Like I was trying trading, but then I was going and coming back. Like I wasn't having trading to be like something on its own. But truly, like, can I have a minute?
Yeah, go ahead. Yeah.
All right.
Okay.
So I know everyone like that's like I'm reading the comments and I understand what you feel, you trying and like just asking questions left and right. And I see questions like how do you do the AOI? How do you find the round psychological levels? What do you know about them? Where's your entry point, time frames? How do you narrow down everything? I promise you, I just met this guy. We didn't talk about anything. Everything is in the course. And it's not just like in the course. You have to speak with this guy every Sunday. You listen about his market analysis. The guy just bought a Bugatti like 2 weeks ago. He made it pink. Like, imagine how much like, and not just that, but you have this guy giving you like advice every Sunday. Why wouldn't you want to listen to him? Everything is in there from like what is a pip up until like where to put the take profit. I've seen questions like going like, where do you put your take profit? How do you do everything? Everything's there.
Yeah.
There's nothing that's like not there. You just have to take the risk. If you don't take the risk, you're just gonna be where you are for the rest of your life.
I did not pay him to say this, by the way.
Nothing. And like I do understand, but I just truly believe everyone that actually wants to be in the trading journey, actually wants to be a part of this. If you really want to do this, come to the Swing Trading Lab.
Yeah, that's all I have to say. You'll see him and say you'll see Nestor. So
Yeah.
I know like what results have you had?
Oh, crazy results. I've been able to turn I think when I did my first flip, I did $244 to 10,000 on my first flip. And that was like ending the last week of the boot camp with Alex.
Oh, that's right. Yes, I remember.
Like we're both from the 30-day boot camp.
Yeah. Look at this. Look, literally, you guys cannot lie. Oh shit, where's the camera right here? Look, you can't lie on these results right here. This is the set and forget results from the boy Jay and Juice. Sheesh. Congrats,
4 days.
Yeah, congrats on that, bro. So yeah, like this is something that students get literally every single time. We've had students make 400K, students make 80,000, students make 45 and 1,000. So this is stuff that I literally show and people replicate with the trades that I share every single Sunday, just like this one. So these are results from literally just Sunday swings, copying the same trades. If you look at the pairs, they're pairs that I break down literally every single Sunday. So if you guys want to see the exact trades that took me from $100 to 8,000 in the 4 weeks, all you have to do is simply join Set and Forget and let me be your mentor so you can make trading your biggest source of income this year. All you need for this is literally 3 things. You just need 2 to 3 hours per day, every single day for 3 months. Sorry, you got to put in the work. You're not going to make 27,000 in 4 days if you do not put in the work. You obviously have to have some type of good internet, so you can put in the work and be up to date with the markets. And then you have to simply have my strategy. If you do not have my strategy, you're not going to have the results at the speed that you should be having them. So if you join Swing Trading Lab today, you're going to literally get access to the whole entire Set and Forget strategy, which is what they have been through. You're going to get access to Sunday swings, which is calls like this literally every single Sunday. You can also get access to the Discord community where they're chatting in there every single day. You're gonna get the trades that I take on the 100 to the Mill series, the actual psychology course that I journeyed about 4 years ago. When I was in my journey, I actually documented my journey, and it was, super sick because it's a real raw version of me on the come up. So you get to see those psychology videos. You get one mastermind class for free. You get lifetime access to any update course that I have. And literally, you're going to also get my special flipping masterclass. All this, if you simply want to join Set Up Forget community today. These are all bonuses because you guys have been part here of Sunday Swings. And you guys have been here for the whole hour. So if you guys want to be part of the Swing Train Lab community, I'll leave the link in the description below. And for the first 10 people that join, they're going to get access to a 10K Rocket 21 challenge for absolutely free. For those guys that are wondering what the price is simply $1,500. So if you guys are ready and you guys are going to be part of those first 10 people, I'll see you inside. And I'm going to most likely see you in 7 more days when I do Sunday Swings again and again and again. Because the free ones I do here very occasionally, and the value isn't just as same as the ones from inside of the community. So appreciate you guys being part of the stream and watching this all the way to the end. I hope you guys can rewatch this and you guys can use, other people that can be just like your guys' selves as a form of motivation and inspiration, because the journey is different for everybody. Some people have some type of foundation, whether it's be money or whether it be friends. Some people have nothing. And there's people from all around the world that have different types of foundations and have been able to make results. So you have the decision for you guys to do whatever it is that you guys want to do. All I have to say is that you have to show up every single day in order to have the results and be as successful as you guys want to be. So with that being said, set and forget, use these trades for you guys' well-being. And I'll see you guys throughout the week. I'll leave the description in the comments below so you guys can join the Set and Forget community. First 10 people get a Rocket 21 Challenge 10K. See you boys.
Take the risk.